Right, let's get a check of the business news now with Tom Piotrowski over at CommSec. How are we looking today, Tom?
Pete, not great. We're going to kick off with a loss, although it's a shadow of what we have seen on Wall Street. The SPI futures are pointing to a decline of 0.5%, but we saw declines of around 2% in the case of the Nasdaq, hitting a 2-month low. The S&P 500 down 1.5%, and the Dow down 1.3%. Bearing in mind that they're still open. The adjustment in summertime locally means that they now close at 7 a.m. Sydney time, for example. So if you were to really summarise it, Pete, you've got the March higher for long-term interest rates, and that's creating some pretty brisk headwinds as far as stocks are concerned. We saw a measure of job strength last night in the US, which was much stronger than what the market had anticipated. It's the job openings and labour turnover survey, which was had its best recovery in around 2 years in terms of job creation. So it's been moderating lately, but this recovery last month has added to this case for interest rates being higher for longer. And that's one thing that has underwritten this surge higher for interest rates in the last day. In the case of a US bond in the US 10-year Treasury note, up by 11 basis points to 4.79% last night. That's a very muscular move higher in the interest rate picture. But at the margins, that story that you've just been discussing in relation to the political setup, the situation with the Speaker of the House of Representatives is very challenged at the moment, and more political uncertainty in the US could be a factor at the margins pushing these bond yields higher. So that's something worth considering. We saw European markets generally weaker also last night, so that just adds to that downbeat picture where equities are concerned. The other thing to point out is the Aussie dollar has lost considerable ground last night. So bear in mind, a couple of days ago, it seemed comfortable above 64 US cents. Now it's back to around 63, having been at 62.8 at its low overnight. So this is a reflection again of that surge higher, in particular for US interest rates, which is supporting the US dollar and making a casualty of many other currencies.